Hello Market Club members everywhere. Adam Houston here coming to you from the digital studios of Market Club. Well, after Super Tuesday, we have Somber Wednesday. Huge move yesterday in all the markets, and we'll be going over there and we're giving you some target zones where we think these markets can go to and where we think they can fizzle out at. So first of all, let's start looking at gold. Gold has sort of really hung in there, and I think this is the important thing to look at. The trend in gold remains very positive. You can see right here all of our trade triangles are positive in that market, and I think if you look at the, so here we are, we're plus 100, but this formation, you're coming up like this and then creating this type of formation is very bullish, because the reality is this market is just biding its time and still until things start to get dicey again in the markets. And I think what's going to happen is we'll sort of go along here and then just eventually bust out at the apex of this triangle. So still very bullish on gold, thinking go much higher, and clearly the trend is your friend. The monthly and the weekly are the ones to watch. The daily is for timing, so if we get a red daily trade triangle, just step to the sidelines and wait for another green daily trade triangle to get back in. That should do very well for you. This Dow, what I want to share with you on the Dow is something I really feel we've seen before, and that is the kind of formation, and that is like a double bottom right here. So this is a double bottom, and this is a pivot point right here. Measuring in this sort of shape, we can see this market for the Dow going up to 17,000 and change. So we're not that far away, as a matter of fact. So I think we can get to 17.1 maybe, but this is where I think the market's going to have real problems. I think it's just still building a much bigger base, much bigger top to go lower, in our opinion. So let's watch that very carefully. But we did get the green weekly trade triangles that stay on the sidelines, and you can see that happened 1, 2, 3, 4, 5, 6, 7, 8, 9 days ago. So we were warned that something was afoot here, and it's exactly what's happened. So let's move on and look at our next market. This is the Nasdaq. Big day yesterday in the Nasdaq. A little bit of a different formation here, and I want to share that with you. This is what's known as the head and shoulders bottom. So this is the left shoulder, what we call the left shoulder right here. This is the head, and this is the right shoulder. So we just measure from here. So we take these measurements like this, flip them over, and this is on the Nasdaq, remember, and we're looking for a move possibly to 4,900, which is around these levels right here. So that takes us very nicely to the previous lows, which should be a real resistance area for this market. So I think we could still go higher, but I'd watch this area very closely. The 4,900 level, just mark that on your calendar as an area to watch, possibly for shorting positions, because we have a mixed picture here. We have our monthly, which is negative, indicating a lower trend, and we have our intermediate term trend positive, meaning you should be on the sidelines in this market. That kicked in just 2-3 days ago. You can see right here we had a green weekly trade triangle indicating that something is afoot, and of course yesterday, or the big day yesterday, Super Tuesday, boom, right up. Watch the market. I think it's going to steadily trend higher, then eventually it's going to do one of these. It's going to turn back down. I think that's the important thing to remember. This is crude oil. Crude oil continues to sort of meander sideways. We did have a weekly trade triangle indicating the trend has actually turned up, and this is important to look at. The weekly trade triangle came at 34.69. We're currently at 33.72, so you have a chance to buy it at a lower price. And I would not ignore these signals, because they do not come in that often. If you look at the weekly, this is the key, what we're looking at. The weekly is for trend in the crude oil. You can see the weekly came in right here, all the way back in October of last year. So October, November, December, January, February, stayed in for all those months with a negative downtrend. Is it going to be the same way on the upside? I don't know. I don't think so. But the reality is this market has bottomed out. You have the double bottom again here and the pivot point. So if we go over these levels, we could see this market go up to the 42, 43 level, which is around here, possibly to 43. So I think that's the target zone on oil. This is the April contract we're talking about. So take a look at that when you have a chance. This is the S&P 500. You can see clearly we've got this movement up, a double bottom, another double bottom again, and this would indicate, let's just put that in so we get this formation very clearly in your mind. So a double bottom is when you try to test the bottom again. You may go under by a couple of points, but it bounces right back up. You can see it had 1, 2, 3 strong days up, and you get the double bottom, then you create the pivot point, which is created here, and that indicates a target zone for the S&P 500 of somewhere between 2050 right here and possibly 2080, somewhere between these levels. But again, that's going to take it back into this resistance area where I think the market's going to have a really difficult time. We've covered the markets today: gold, crude oil, all the indices. I think this is something to watch very carefully. I do think the indices can improve from current levels. Obviously, the big unknown certainty this year is the political picture, which is going to be obviously very volatile. But nonetheless, the markets are trending, and you should be, if you're conservative, just be on the sidelines in the major indices. If you're aggressive, you should probably want to be long for a move up to those levels we talked about, those target zones. And also in the gold, keep close eyes on the gold, and also crude oil. If we're seeing that work, if crude oil goes higher, then the market's going to continue to go higher. If the crude oil goes down, which makes no sense to me, but the markets go down. Hey, I'm Adam Hewison. Thanks for watching. Every success. I'll be back tomorrow.